Hey there, it's your career insider, Sindy Thomas, welcoming you into another episode of the Insights Career Club. Our podcast helps job seekers succeed in their job search. But did you know that we also coach professionals throughout their careers? As an in-house talent acquisition person, you know by now that I've interviewed thousands of candidates and worked with hundreds of hiring managers to fill positions over a career of 25 plus years. My coaching sessions will help you understand what managers look for when hiring. And if you listen to the podcast regularly, you can learn a lot. You'll find free job search support on our website and a variety of paid career services to meet your needs. And don't forget about our newsletter. You can sign up for that on the site. Now stay tuned. There's a great podcast coming up. Our special guest today is Robert Persichitte, certified public accountant and certified financial planner. He's guided business leaders and individuals with financial and investment decisions for over 8 years. He is an accountant at heart and an award-winning analyst, well known for using data to make sound decisions. Robert is driven to improve the world and help clients invest in organizations that align with their values by specializing in environmental, social, and governance stocks, better known as ESGs. He's been the director of the Volunteer Income Tax Assistance Program since 2017 at the Metropolitan State University of Denver, and he's also worked as a public servant for 5 years at the City and County of Denver, and now runs his own financial planning firm. Let's welcome him into the show.
Robert, thank you so much for joining us today. I'm really pleased to be able to talk to you about your career.
Well, I'm happy to be here.
Wonderful. Well, would you share a little bit about you, like where you grew up and a little bit about your family?
Sure, yeah. So I am a very rare Denver native. I was born in Denver and I grew up in a very industrial part of Denver. For anybody who knows it, it's the Globeville area is where I grew up. Okay. I was around business and factories and buildings pretty much all my life. After my mom was a single mom, had me when she was 18 years old. And for childcare, I was going with regular family members to their offices all the time. One of the people I spent a lot of time with was my grandma, who was a bookkeeper for a carpet company. She used to give me the old forms to play with. So once a form was no good anymore, they couldn't use it. Then I'd get a color and draw on it and everything. And I kind of started my love of accounting back then.
What's one of the best things that you can share with us about growing up?
I have a big family and I'm the oldest grandchild. That allowed me to spend a lot of time around adults and get a lot of attention. And, you know, everyone knows little kids just love attention. And I do have another sibling. We are 16 years apart. I joke with my mom that she had 2 only children.
Yeah, pretty much, huh? Because you were just about getting ready to go to college when that one came along. So
you got it.
Yeah. I do have friends like that. One of my best friends that I grew up with, she's from a family of 6, but the top 3 are all kind of close in age, and then the bottom 3 are close in age, and there's a gap, a fairly big gap in between. So yeah, you know, it does happen. What can you say? Not a whole lot about that. But, you know, at least as you grow older, the difference in age won't matter quite so much. You know, there'll be some differences, but not as stark as it is when you're 16 and 1 or less than.
Right.
So let's talk about your career. I can see how, you know, the connection to numbers and the counting comes in from spending time with your grandmother. But what is it about it that attracted you to want to major in economics and accounting?
When I first started college, I looked and there was a list. I couldn't tell you who published it, but it was a list of the top paid careers. And my school didn't have an engineering program, so I had to go number 2 or 3 on the list, which was accounting. And then the one after that was finance. And so I went to my advisor and say, I want one of these two jobs because they pay really well. And he enrolled me in the classes, and I love them. I absolutely loved what I was learning, and had some phenomenal teachers really walk me through and mentor me and help me understand what was going on. A few years into it, if somebody told me that there was a better job out there, I don't think I could have left it, because I just loved the people. I loved what I was learning.
Well, that accounts for a whole lot. If you have passion about something, it just makes it that much more interesting. You might have a little bit of interest, but if you're passionate about it, and that's kind of how I felt about recruiting when I fell into TA, I was passionate about it. So it just makes it so much more interesting to you. And that gives you the opportunity to excel because you're that much more tuned into it. Why did you decide to do your graduate work in data analytics rather than focusing just on the finance?
Well, in Colorado, there isn't a particular degree that's required to get your CPA. You just need 150 credit hours. Strictly speaking, to be a CPA in Colorado, you don't need a master's degree. A lot of people do it by taking two different undergraduate degrees. So you'll get like a BA and like a BA in accounting and a BS in computer science or something else. As long as you get to 150 credit hours, that's all that really matters.
Okay.
Yeah. And most accounting jobs that I've seen don't really care if you have a master's in accounting. They don't really care. They want you to know enough accounting to be able to do the job. And by the time I was evaluating getting more education, I had already worked in the industry. So I had the industry experience, and I wanted something that just kind of complemented my job and complemented what I was doing. I was doing a lot of data analytics as an accountant. So it's a really critical skill to have, which is why I expanded down that road.
Okay. And yeah, it did open up your choices for work, right? Because you have a broader sense of what's going on with, quote, the numbers. I'll just put it that way, because I'm not an accountant person, or someone that's in finance or has a great understanding of it all. But it just opened up that many more opportunities for you. Is that what I'm hearing you say?
I do think it opened opportunities. I think it made me a lot better at my job, which allowed me to move up in the organization. And why it made me better is because without those skills, especially the main skills to focus on are going to be what they call ETL, or extract, transform, and load. What that is when you're getting data out of a big system and putting it into something that's useful to you. For example, you have a big accounting ERP system, you're pulling all of the transactions out of it and then loading it into your audit software. That is a really useful skill. And there was a transitionary period where a lot of firms had people who were just hired to do that. Now we're starting to see the people who are really excelling and being very valuable candidates for the firms can do that and the accounting. They can do two things together, and it's a lot more efficient because you as the accountant know exactly what you want. Whereas if you have to go to an IT person in between, you're going to have some loss in efficiency due just to communication. They're not an accountant.
Okay. For example, in recruiting, there was not so much emphasis on the data, but I think data has become much more important across the board, cross-functionally. So how does that tie into being able to, let's say, if you were working with a large company, how does that tie in for you to be able to help your internal clients with data?
Really, it's getting it to me. Most people don't think about the nitty-gritty of their data. And a lot of leaders in business don't even necessarily know the specific details on how it got into the system. You might have to do some digging into operations to see how does the system work. You can do that through traditional audit work. That's certainly possible. Interviews, making a fictitious transaction and tracing it through to the aggregated statements. But it's a lot faster if you can figure out what the computer's doing. Really, accounting these days is all about efficiency and how quickly can you do it. So if I, for example, have a tax client, I will only take on new tax clients where I can connect directly to their systems. If I can't connect directly, then the amount of time it takes me to do the work is significantly higher, but that also allows me to be cheaper than a lot of my competitors who will spend hours and hours manually combing through.
Well, I can totally understand that, because the people that are not allowed or not wanting to get into the system and see it for themselves, they're getting information and it might be second or third hand. There could be errors in that, passed along. I could see one advantage to that, but then just the efficiency piece of it, as you said, that really makes quite a difference. And then for the client's bottom line, it makes another difference because it's much more cost effective for them.
Yeah, for me, all those skills go to making sure I have all the information I need to make a good decision and making sure that it's good information. We're not deciding on bad data. We're deciding on what actually happened.
Okay, sounds good. Just for those of us that aren't knowledgeable about economics, well, I'm a little bit about economics, but finance and accounting, I know they're two different things. What is an audit ideally supposed to do from a business perspective?
Well, there's different types of audits. And the audit that everybody is going to be most familiar with or have seen in things like TV and the news and everything is a type of compliance audit, which is a tax audit. That is one type of compliance audit, but there are many different types. And basically, they are all there to make sure that you are following the rules and that you don't owe anybody any extra money. Usually, you are being told that you're being audited in compliance audits. There are some companies that are proactive about it, and they will do compliance audits internally to make sure that they can fix any problems before the IRS or the Department of Defense, who's signing your paycheck, comes and audits you. But usually for the vast majority, you're doing these because you have to go through them to get your grant, or you have to go through them because the IRS is at your door. Those are compliance audits. Moving up the line a little bit to the other end of the spectrum is an external audit. These are required for publicly traded companies, and you basically have some auditors coming in to make sure that you're telling the truth on your financial statements. You're there to make sure that there's nothing fishy going on. Now, these have been criticized on both sides. Some folks say they don't do enough. Sometimes they miss fraud. Sometimes they miss theft. There's other people that say they do too much, that they're really expensive, and people don't really care about the results. But whichever side you fall on, if you're going to issue stocks in the United States, you're going to have to comply with it or find an exemption. Most companies are going to have to comply. The other end, this is a little bit closer to what I do, is performance audits. So performance audits look to answer two questions. Number one, are we doing what we are saying we're doing? So when I worked in the government doing this, we answered one question: does the government do what it's supposed to do? We said we're going to try to solve this problem. Are we solving this problem? Are we moving the needle? Are we helping people out? That also holds true for businesses, performance audits, and saying, does our product meet the right specifications? Are we working as a team to achieve a goal? The product of that audit is going to be recommendations that help improve efficiency and really help people get closer to their goals.
Can you walk us through a little, just give us a thumbnail sketch of what your career has looked like?
Sure. I have worked almost every job in accounting except for the most common two. And I started out as a compliance auditor. That was my first job. I worked for the state courts, and I had two different jobs with them. One, I was auditing probate estate cases. So when somebody either passes away or you have a conservatorship, if you've seen Britney Spears in the news getting out of her conservatorship, a probate auditor likely could have helped her in that situation, avoided some legal fees there.
Mm-hmm.
Another thing that I was doing for them was some audit with their adult probations unit. And my job was to track down money that criminals had hidden. It was a very, very fun job. I really, really liked it, but it doesn't pay very well. So I ended up going to a Big Four accounting firm. They're kind of the prestige jobs in public accounting. They're the ones that you really want to work for because you get exposed to lots of opportunities that you wouldn't otherwise see. But they do come with their downsides. They tend to have a reputation as a meat grinder where you really have to work, and it's a up or out mentality. You're either climbing the ladder or you're looking for something else. The minimum expectation when I was working there, this may have changed, but the minimum expectation, this was in my employment contract, was that I was working 65 hours per week on average. I worked not in external audit there, which is what most people do. I actually worked in their advisory practice, answering just kind of whatever questions clients had. And the joke that I like to tell is a client would ask us, can you figure this new thing out? And we would say, we can figure anything out, and we bill by the hour. I tell people I loved everything about that job except for the quantity. There was a lot of work, a lot of travel. And then I kind of switched gears a little bit, did performance audit for government entities. And now I am doing taxes and personal finance. The advantage to it for me is I get to work kind of through the whole process from beginning to end. So I make sure that everything I'm doing for my clients jives together, that nothing that's lost in translation, that we are able to take a theoretical plan and put it into action. Why I kind of stepped in that direction rather than the bigger employers that I've had before is so that I can really take ownership of the process. Nothing's getting lost in bureaucracy. Nothing's getting lost. I'm not having to hand anything off due to company policy. I get to see everything through. The downside is I don't work with, I used to work with giant corporations, with billions of dollars to throw around. Now I'm working with individuals that probably don't have billions to throw around. I haven't met any yet that do.
Yeah,
so
exactly.
It's a lot of the same types of planning and execution, just on a much, much smaller scale.
Yeah, but you're dealing with people's retirements and how to get to retirement.
You got it. It's a lot of the same analysis. Kind of backing up a little bit, one question you asked is, what's the difference between accounting and finance? Accounting is backwards looking. We look at what happened and try to measure it objectively and as truthfully and accurately as possible. Finance is about what is going to happen. So we're making projections about the future.
Exactly. Okay. All right. And that's great for the listeners to hear as well, especially those that might be considering a career, and with that slight difference of, well, what would you rather do? Do you like to think about planning, or would you rather be investigative and go back and look, right?
Exactly. Yeah. Some people have a real hard time switching from one to the other, where a lot of finance professionals will think accountants are pedantic and overly obsessed with details, where accountants will look at finance professionals and say, well, hey, you just guessed for this number. And sometimes you have to when you're making projections about the future. It's an educated guess. It's a guess based off of facts and research, but nobody can prove that that's what is going to happen. It's just what we think is going to happen.
Yeah, you're using the logic of what has happened before will probably happen again, and maybe draw in some other factors of what's going on in the economy or whatever, and then you come up with your projection.
And so each of the disciplines relies on the other. So finance professionals rely on accounting professionals. The information that accounting professionals are making drive those financial projections. Without finance professionals, accountants wouldn't get paid because nobody would be using their work. Nobody would care.
We like accounting because they do our paychecks, right?
That's right. Yeah.
So
and we like finance because they make sure when we go to the bank, our paycheck is going to cash.
So talk about the qualities that someone would need to be in either a finance or an accounting position?
Yeah, so I'll break it down kind of one piece at a time. First, I'll say kind of universal skills, things that everybody's going to need. You're going to need to be able to communicate, and you're going to need to look at some type of summary, a summary of numbers, and translate that into words and what this means. And so you might look at something and say, hey, the business is shrinking. That means we need to cut our expenses. Or you might say the business is growing rapidly. We need to find ways to scale. If you're going to be in the field of audit, you'll have to have the mindset and skill set to be able to research a problem and understand it at least as well as the people that you're auditing. This gets tricky because they might do this every single day for their job, and you have to just research it and get up to speed and talk to them very quickly to understand what's going on. You're going to have pressure from your boss to do it in fewer hours because most accountants bill hourly. And you're going to have pressure from your supervisor who's signing off on your work to make sure you understand it well enough. And you really have to balance those two. As an auditor, you certainly have to be a quick study. You have to be able to pick things up quickly.
If you like learning things and doing research and getting up to speed on something, so that's a new challenge. If you like to have challenges coming at you and then meeting those challenges, it sounds like that's a quality that somebody that has that, it would work for them.
Absolutely. And a really good rule of thumb for this is if you start a new job and somebody only has to tell you once how to do something, that's a pretty good indicator that you can do audit, and maybe more on the side of performance audit, which just involves a higher volume of doing that. When I was auditing a new agency, I felt like it was my first day on the job every day because I'm just going in and talking to people and saying, how do you do this? How does your job work? And you're trying to achieve a goal. How does it work? So I had a first day as a firefighter and a first day as a police officer and a first day as a probation officer, a prison guard, a teacher, all these different jobs. I had to go in and say, how do you do this? And it's a fun skill if you can do it. It's stressful if you can't.
Yes, because you still have to perform and get the work done.
So the finance side, you need to be really comfortable with what I call professional skills, which is kind of knowing when you've researched enough, knowing when it's cooked, knowing when you have learned enough to make your decision. Because the more time you spend on something, obviously that's time out of your life. That's time that you could be going home, learning new skills, whatever. But also you're going to have pressure from your boss. There's a lot more time pressure in finance because if you have the right answer, but you're not the first person to get the right answer, that's a problem. Is if you're in investing, someone else can invest in that before you. If you are internal and you're working in services for the company, well, if management can come up with the answer before you do, or they get impatient and they don't need the answer anymore, you haven't provided any value. You haven't helped anybody out.
With finance and projections and whatever, the business is depending on that to make other business decisions. So they do have a window. So exactly. You have to be able to work quickly.
Yeah, and what was always so challenging for me is knowing, well, when am I done? Because I could do more research. I could make a better guess about the future, but when is it close enough? When is this enough for us to make good decisions based off of it? Another kind of side note, a lot of finance fields are going to require at a bare minimum algebra. If you're going into, like stock trading or anything like that, you're also going to need some probability, and you're going to need probably some calculus. So be comfortable with math for finance. Accounting, the hardest math you have to do is what number is bigger.
Oh, interesting. That's one of the things that I loved about my job, is because I'd have to go in, I'd have a manager as a client who needed to hire someone. And I've never been a scientist. I've never been in accounting. I've never been in marketing, but I have to learn about the position, the department, and figure out the nuances so that I can recognize the talent when I see it. So, that was what kept me going, because it allowed me to have a great and grand overview of the company and truly understand how one department worked with another and, how this gets from here to there. It was great. So, that's a possibility for someone that wants to be, in accounting or in finance.
Yep. Really, that's the whole name of the game with a performance audit.
Okay. Can you talk a little bit about a recession and what it is and maybe how people can prepare for it?
Yeah. So recessions normally throughout history, through what we've experienced, come with lots of negative effects for individuals. And those negative effects are not the same as what is a recession. So first, I'll talk about some of the negative effects. Then I'll talk about what a recession is. And then I'll talk about the outlook on both the negative effects and what we see there. So the negative effects that we've probably experienced is, number one, a contraction in the stock market, a decline in the stock market. We tend to see the balance in our 401k goes down, the balance in our investment accounts goes down most of the time in a recession. Now, it depends on how you're invested and everything. But generally, during a recession, we've seen those share prices go down. The reason that those things are tied together is because of what a recession is. A recession is a decline in the economic output, so the stuff we make. It's a decline in the stuff we make, the services that we perform.
Okay.
There's another side effect that people have probably seen, which is it's harder to find a job in a recession. A lot of businesses are clenching a little bit tighter. They want to be very careful about how they spend their money, and it makes it harder to find a job.
Right. And we have seen unemployment rates go up, even though they're still low, but it has gone up a few points. Yeah.
They are. Yeah. They're ticking up. It's still historically low. It's never been this low for this long.
Yeah. I've never seen it like this in my 25 plus years, but yeah, we had unemployment at 14 or 16%. I can't even remember. And then it slowly started to go down. So it can do the reverse. Yeah.
You got it. You got it. Now, what a lot of experts, including me, are predicting is something called a technical recession, which means our economic output goes down, but the impact of those bad effects isn't so bad that basically companies have been hiring like crazy, expanding like crazy. We likely will see that slow down, where we're not going to see people throwing around money, people switching jobs to get 20, 30% pay increases. Probably not going to see that anymore. But we're also probably not going to see something of the same magnitude of 2008, where people are losing their homes, where there's widespread unemployment, panic in the markets. The advice for anybody going into this, first, as a general rule of thumb, everybody should have 3 to 6 months worth of savings in an emergency fund. That way, if you do lose your job, you have a little bit of a runway to look for a new job. Where you fall in that spectrum is usually going to depend on a lot of factors, but how specialized is your job? So if you can do the same job pretty much anywhere, that might be a little bit closer to the 3-month side. If you're very specialized and you're only doing one type of thing for one type of client, so maybe you work in the energy industry where they tend to be all affected at the same time, you want to be a little bit closer to that 6-month side.
It also depends on what level of job you're looking for. That may be fine for everybody, and maybe entry to middle management, actually entry manage, like an associate director or manager and below. But if you're looking for something higher, like a director role or even a middle manager role, some of those roles just aren't there anymore. But the higher level, the higher you go up, VP, whatever, it's going to take you add 3 months. So it can take you longer, but generally for someone like that, they have a buffer because they've been making more money, so they can save more money.
Right. Well, and you might have other means too. So if you're making more money, you might have had an easier time accumulating wealth, and you just have some cash sitting around. In terms of the investment side of things, You want to invest for the long term and make sure that your investments line up with your goals. The old adage for it is you want to stay liquid for longer than the market is irrational, meaning you don't want to have to sell stocks when they're low. You don't want to sell stocks when they're low. You want to be able to hold on and ride out any recessions. And in order to do that, you just have to make sure that your goals, your values are reflected in your investments. Usually the easiest way to do that is with a comprehensive financial plan.
Okay. All right. Well, I have to say this has been a great and very enjoyable conversation. I've learned a lot. I'm sure our listeners have too. And I want to thank you so much for taking the time out to speak with us today.
Well, I'm really happy to be here, and thanks. And thank you to all of your listeners. As you mentioned at the beginning, I'm Robert Persichitte with Delagify Financial. That's Delagify. And I really enjoyed being here.
We enjoy having you so much. You have brought a lot of value. Thank you so much, Robert.
So glad you joined us today. If you enjoyed the podcast, please like us because your ratings matter. We'll be bringing you new podcasts every 2 weeks on the first and third Wednesdays. My goal is to help you, my valued listeners, in your job search and continue to help you right on through your work life. To make that happen, though, your support is needed. By listening regularly, we can keep this going. But you can also help by sharing the podcast with your network of friends, family, and coworkers. Ask them to listen. We're on Apple and Google Podcasts, Spotify, Stitcher, Pandora, iHeartRadio, and so many more. Not so podcast savvy? Tell them they can go to listen on our website at www.insiderscareerclub.com. I appreciate your support. Stay safe and take care.